Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Wednesday, April 24th. Markets continue to move higher, building off of Friday's options expiration. Dow up 152, Nasdaq up 36, S&P up 16, and gold down 11. Okay, so where do we go from here? Markets have actually traveled for 3 days higher. When everything looked bearish, all of a sudden everybody loves the markets again. So I think it's just right now more of a dead cat bounce. Markets were a little bit oversold, but we can't argue the fact that the markets can go higher, and they can. So we're still working on looking to see if we have a tradable top in place. That has yet to happen. We do have some pivotal support areas that, if broken, could be a major trend shift. So that's something that we'll continue to monitor. So let's go into the in our indicators. We'll take a look briefly at our indicators, then we'll go right into the stocks, into the sectors. There are a lot of yesterday was relatively quiet up until the AP hacking on their website reported that the White House has been bombed and President Obama has been injured, and we had a major whip down lower about a good 100 points, and then literally right after that, markets came right back up again. So you can see how dangerous this market could be, because everybody's on their toes, and you could see that there's a lot of nervousness out there, and that's why, me personally, I'm just tending to day trade until markets can really realign itself, get some sort of a decent correction, and then hopefully chug along higher. All right, so here's our NYMO. It's a trusty NYMO McClellan oscillator. Excellent tool to use to read overbought, oversold reading. We have now spiked up into the 19 area. We're still far from being overbought. Anything up above the 70 area, right up in here, 60, 70, 80, I would be looking to put out positions to sell the market. Right now, that has not done so. So we're still now back up to this area here. So we'll see if we get some follow through. We are up about 4 handles in the pre-market before while I'm recording this, and we're just going to see. We're going to take it one step at a time here. Actually, believe it or not, even though we've been up every day, it's been very quiet during the course of the trading day. So that's also a big cue to kind of say, this is kind of weird. We're in earnings season, and yeah, there are some things moving, but there's been a lot of quiet price action in a lot of different sectors and stocks that we've been looking at. All right, so let's take a look at this is something that I've been showing for months. We have the stocks above the 50-day moving average. We have now broke support. Now we're back testing it, and we'll see where this goes. This is still bearish. As you can see, the markets are moving up, and the stocks are not. And that's one of the reasons why it's relatively quiet in intraday. You have to really dig in deep and look for stocks. And with 7,000 stocks out there, it's hard unless something comes running along by your screen while you're scanning for stocks. This is kind of quiet. So we are below our trend line support. We just back tested it now, and as you can see, the indexes are moving, stocks are not. So that's still a big red flag to me here. Okay, take a look at the percentage and Nasdaq record high percent index, and as you can see here, when you have stocks, this has been a pattern down. We retest it, make a higher low, and then rally again. So let's see if this happens now. Let's see if the markets roll back down again and we get a lower high here, and then really start to accelerate to the upside and start making new highs in the S&P and the Nasdaq. This is going to be interesting to see. So we have on one down day, we did have the 2 here. We had only 1, and then all of January, pretty much all of February, and then all of March, now we're just picking up a little bit of volatility in April. I still think the markets are in a correction, and I think we're going to probably see an 8 to 10% correction, which would be very healthy for the markets, by the way. Copper still continues to lag. This is another big red flag, reason why I say that we're probably due for correction, and it's in the cards. Copper can't continue to break down like this, and the markets continue to hold up. Now, they sure can, don't get me wrong, but let's put it this way, less likely the markets to move much higher with copper divergence, stocks not moving, and you have a big sentiment, bullish sentiment, and you have one-sided, everybody's one-sided bulls here. So you have to be careful with that. Okay, so let's take a look at the U.S. dollar. Another reason. U.S. dollar, take a look at this. Looks like it's ready to really start to rip here. Let me bring that down a little bit. Coming out of a bull flag, we had a nice big run up off of this symmetrical triangle. Ran right up into this area of support. We flagged with lower volume, and now we're moving higher on. So let's see what happens here. We could get a sentiment shift. Right now, we're inversely correlated with the markets, but that could change. The more bullish we get in equities, the more people want to buy our stocks, which need to convert our doll to our dollars. So that could actually change. But right now, we're still inversely correlated. So we'll just keep that in mind. Keep an eye on what's happening here. All right. So let's go right into the charts. Now, very bullish, despite the fact that there's low volume and everything. You can see momentum's lagging. There's no question about it. So coming off of Friday. Options expiration. We had 2 days up on top of that. I'm going to discount Friday because options expiration is always usually bullish. But we had a nice big rally here. Now let's see. We could really test the highs or even break higher. I wouldn't doubt it. The last thing I would do is put my money against the trend, and that's not it. We have a very strong trend, guys, and I wouldn't be looking to pick tops here at the moment. Okay, take a look at the spiders, and again, really, we were into this sideways consolidation. Now we broke out of it, and looks like the next step really is to test the highs, which would be 159.75. So we did get a lot more volume yesterday in a lot of these indices. So that's also a positive note. Here is the 60-minute I mentioned yesterday. We had a right shoulder, head, left shoulder, and this is a bearish pattern. Only bearish when the markets break the neckline, and this is going to be the pivotal support. 153.75 is going to be that pivotal support, and as you can see here, reason why. Look how many times we touched it. This is the gap area of support we're looking for, and this is going to be your lower end of the gap, 152.85. So make sure you mark that down, put on a post-it, make sure you know where it is. These are going to be key areas here, so watch this. This is going to be important. Here is the 30-minute with our Fibonacci retracements. We're back up to the 61.8% retracement. Here's this gap area that we were looking for, right? We had that gap's resistance now. We're at 153, 158, call it. So we're back into the 61 and the 70.8, 76.4% retracement. This is going to act as resistance. If we break out here into this area and we break this area here, then more than likely we'll probably test R3 and back to the highs again. So as you can see, 3, 4, 5 days lower, nobody wants them, everybody wants them again. So this is the mentality of the markets right now. So really have to be keen and be alert and definitely trade your trading plan. Very important. Spiders, 30-minute, just want to show you a little bit longer term support areas. We know this, 153.75. This is going to be the main pivotal. From there, you're probably going to get a wash down to the to S3, which would be a lower end of the gap. And then from there, we're really going to break 149.90, 148.65. Now, that has not happened yet, but these are just longer term projection targets if the market were to correct. XLF recovered from this bear flag back into this big bearish rising wedge. And again, only bearish when the market breaks below the lower trend line. So we're back into it again, guys. We're basically back to where we were a little over a week ago. Again, looking to see if this market's going to correct. So now we're back to doing the same thing again, unfortunately. Diamonds had a big 2 days, as you can see here, big doji. And then we had a nice big push higher, back testing this lower upward channel trend line. So keep an eye on the Dow, and we'll see what happens from it. But you can see we're starting to unwind here. So the more we trend sideways and consolidate and just kind of grind higher, these oscillators will start to unwind their overbought reading, and then has fuel to move higher yet again. Okay, here's the IWMs back into this channel. Now, the IWMs is no doubt the weakest sector, which is one of our leaders, right? This is definitely our leader, aside from the transports. And this is actually lagging. Even though we're up, we're still below the 20-day moving average, where all the other indices are just about above it. Okay, here is the transports, and this is another lagger below or at the 200-day moving average. So again, guys, let's keep an eye on the transports. Let's keep an eye on the Nasdaq. Let's keep an eye on the Russell. These are the three biggies that we want to keep an eye on, and see if we can get some intraday divergence to give us a little sign. Hey, the markets might be rolling over here. Okay, so keep an eye on these three. Again, these are the two weak ones. Now, as far as the Nasdaq's concerned, we had Apple report yesterday. Now, Apple had their buyback. They increased their buyback. They increased their dividend, which is all well and good. But what comes to the end of the day is their guidance, and their guidance was a big miss. They were looking at 38 to 43 billion. They come in at 34 34 to 38 billion. That's over a $5 billion miss in estimates. So that at the long and short of it, the markets really kind of realized that, and look what happened after hours. So markets literally clearly reversed, didn't like the miss on their guidance, and really ended up where it was, right where the market closed at. So Apple's going to be interesting today, tomorrow, next couple of days. Might be able to get a couple of trades out of it, but again, I would caution. And I mentioned to a few guys that contacted me, be very careful, because even if Apple went to 430, 440, I think that would be it, and I think the Apple would start to pull back. They're not announcing any products, anything going into at least the fourth quarter, which gives you seasonal weakness in technology anyway. So I think Apple could drift back below 400 and probably test the lower end, maybe the 370 area, 365 area, somewhere in there. I'm not quite sure, but if that's the case, that's where you want to start looking to accumulate Apple. Be patient, because I think it will get there. Without any products announced, and without anything else other than their earnings, which obviously was lackluster to many market participants, I think Apple starts to drift below 400 again, and that's where you might want to start looking to accumulate some shares. Okay? And that's going to really put a damper on the Qs. Now, this was after hours action, so it really wasn't registered in the daily charts. Here's the SMH. Really nice that we broke out of this trend line, this slanted trend line, which is nice here. And you can even see here, you might even have an inverted head and shoulders here, right? You have your right shoulder, your left shoulder, your head, and your left shoulder, on your right shoulder. So, and here's your slanted neckline. So you're looking at 33.49. 35.60. So all you do is you take that 35.60 and minus 33.49, and you got $2 upside target from the trend line here. So you got an easy 37.70, which would probably put it right back into this upward channel. So let's see what happens. But it does look like an easy inverted head and shoulders here, left head and right shoulder with the slanted neckline. So we'll just keep that in mind. Let's keep a look at it. We are coming to some seasonal weakness though in technology. All right, and again, here's the Qs. Big move up. Apple had a couple of good days, and that actually helped the Qs. But we'll see what happens today if Apple breaks 405 today and then 400. All right, guys, have a great day today. Definitely use caution here. I would say pick the best stocks, identify the trend, and then use your stops. Very, very important to be in this game for a long time. Okay? Have a great day. We'll speak to you tomorrow. Take care, everybody.